David here, and today I would like to talk to you about relative value in the fine wine market and how understanding it can help you make better decisions with your wine investing and potentially your drinking as well. So many of you will have heard us at Amphora banging on about this algorithm that we've developed and being very pleased with ourselves. But what is it? What does it do? And how could it benefit you to adopt this type of thinking? Let's explore it a little bit. First of all, let's get into context what I'm talking about with relative value. What I have here is a bottle of Chateau Loville Barton, a very fancy and very desirable Bordeaux wine. And here's another bottle of Loville Barton. Same thing, not even close. Now, you might be surprised to learn that this little bottle closest to me will set you back 70 shiny English pounds. The one on the right, or left from where you are, will cost you £125. That's plus VAT and duty if you're watching this in the United Kingdom. So what could possibly lead to there being an 80% price premium for this bottle? The answer is really straightforward. This comes down to the vintage, or in other words, the year of production, and the differences in quality of the wine that the nuances of the vintage create. So all wine producers, not just Barton, all wine producers are subject to the climatic conditions, the weather during the growing season of the grapes. They're also subject to the skill of the winemaker and, to some degree, a little bit of luck. And what we end up with are vintages of vastly different quality. And in the wine trade, we call those on vintages and off vintages. And what that presents with you with as a consumer is something of a little bit of a dilemma, actually, because you've got to make a decision. Are you perfectly happy with the lesser of the two bottles? This, after all, is a wonderful thing. This is made from the finest grapes in the world, one of the greatest terroir in the world. The wine in here is made with the same amount of love from the same expert team. Drinking this is going to be a really special experience. Or are you going to say to yourself, well, hang it all, I'm spending an entire week's grocery budget on a single bottle of wine. I'm going to go for the big one. That extra is worth it. I want stars. I want fireworks. And in making that decision, you're deciding which one of these, to your mind, has the best bang for your buck. And another way of expressing bang for buck is relative value. You are making a relative value assessment. Now, at this stage, we're talking about an assessment which is totally subjective. And now we need to have a think about whether that might be able to be an objective decision process, whether we might be able to bring some structure to it. If you think about the way decisions are made in the more traditional markets, there are all sorts of tools at the hands of the analysts. There's cash thrown off, there are dividends, PE ratios, there are tried and tested methods to establish value. With wine, there's no fundamental value, this is a drink. So all we've got on our hands is relative value, but we can be disciplined about it. So let me show you, let's explore our friend Loville Barton in a bit more detail. And how might we assess more than just two vintages? Let's go for 5. So, if I were to draw you a chart, and the axis here is the value of the cases of wine. And we'll use these. We'll start with 99, 2000, 01, 02, 03. And I think that's sufficient for the illustrative purposes of today's lesson. So we know the 99 comes to about there. We know the 2000 is considerably more valuable up there. The 01 will be a little bit in mid-territory. The 02, pretty similar actually. And the 03 up here somewhere. So, a huge variety of prices. Is this helping us make a decision? Is the cheapest the best investment? The most expensive? There's absolutely no way of knowing. So we need something else. We need an overlay. And if you remember, when we discussed these two bottles, what we were doing is we were making an assessment as to whether we believed the quality made the price differential worth it. So how about a quality overlay? Luckily for us these days, all of the critics give us scores out of 100, out of 20 for the wines. So if you can align yourself with a particular critic you trust, you like their opinions, you're pretty confident that if they like something, you're going to like something, you could use their opinion as the overlay. You'd have to rebase it, but you could have an axis up here. none of these wines will score less than 85 points out of 100 really, and the maximum being 100 out of 100. So if we documented the scores, we might find that our 99 was sort of late 80s. The 2000 is going to be way up into the 90s. The 01, pretty good actually, punching above its weight. It might be up here somewhere. The 02, a bit behind it. And the 03 is really well thought of for lower Barton actually, so I think it might just be a point or two off of the top score that you can get off of perfection. Now we're getting somewhere. This, even though it's for illustrative purposes, this would actually, the real data would look pretty much like this. And what you find if you plot quality against price is that the charts do track each other really accurately. What are we looking for? I'll tell you what we're looking for. We're looking for the wines that are priced incorrectly. And you can see that all of these four are pretty much on the button. But this one, the quality dot, is floating up in midair. There is a differential. Now, why might this be important? So, it's important now to have a think about markets in general. All markets with a traded commodity such as wine, especially wine actually, because wine is fungible, all markets are efficient enough that eventually they will find the right price. Each component within the marketplace will trade at the correct price. Because the wine market is a bit inefficient, those inefficiencies will lead to temporary moments in time when wines aren't trading at their correct price. Now what that means is that the 03 on this basis is a little bit of a bargain. If the wine market goes up by 20%, these all go up by 20%. If it goes down by 5, these all go down by 5. But eventually one of two things has got to happen. Either this price has got to come up to the correct price, or all the others have got to come down. And it's reasonable to think that because this is the anomaly, that the former will happen. Now what that means is that if you're a drinker, this is a nice little bargain, you get it cheap, you've got that great smug joy of drinking wine that's really cheap when it's very expensive in the marketplace. And if you're an investor who is looking to resell it, then you've made that extra little bit of margin. So this helps you hone in on the right vintage to invest in. And this is known as a vertical comparison, one producer over several vintages. And the other way to look at the market is where you do a horizontal comparison, and that's one vintage with lots of different producers. And that could be hundreds of producers. Let's have a look at this, because life's certainly going to get a bit more complicated. I'll leave up our 2000 Barton, and I'll get rid of the others. So that's our Barton. Here's another 2000 vintage. This time this is Chateau Lafite Rothschild, another very fancy and another very desirable Bordeaux wine. Now, the Lafite goes here. I happen to know that from a quality perspective, it's a bit better than the Barton. So now what we're hoping is that the price gives us an indication as to which one is the better on a relative value basis, but we're going to encounter a problem. And here's the problem. This price chart is going to go off the top and sky high. Why? I'll tell you why. This bottle is worth more than £1,000. We are not comparing like for like, and I will explain to you why we're not comparing like for like. This is a first growth, top tier Bordeaux. This is a second growth, second tier Bordeaux. And 99 times out of 100, a first growth will be more valuable than a second growth. So we've got a bit of a confusing moment here. We now don't quite know what to do with ourselves. And we've got to start thinking about what this means and what's come into play here. And the things that will start springing to your mind are things like the importance of the wine, the status of the wine, if you like, the brand power of the wine. All of these things will have a great impact on the value of the wine. So in order to be able to compare these two wines, you need to understand what the differential is and how it should sit. So what are you going to do? So the best thing you can do is go, right, okay, I've got a solution. I'm going to get all the data for Lafitte for as many vintages as I can. I'm going to get all the data for Barton, and I'm going to work out what the differential should be. Once I've got that, I can rebase it, and I can work out like for like. And that is true. You can. So your next inputs to understand your relative value are brand power, and they are the status of the wine. In Bordeaux, very simple, because that's the Cru class system, 1, 2, 3, 4, 5. Fine. So we're making progress again. We're back on track. Maybe. So then we want to add an Italian wine. And now we've got a bit of a problem, because there's no Cru class system in Tuscany where this wine comes from. And even if there was, is a number 1 in Tuscany the same as a number 1 in Bordeaux? How do you decide what's 1, 2, 3? Suddenly, again, you're not dealing with like for like. What happens if you want to add champagne in? This is a totally different thing again. And then let's really confuse it. You want to add in a bottle of Romani Conti. Right, okay. The eagle-eyed amongst you know that this is not a bottle of Romani Conti, but a bottle of Romani Conti is 10,000 quid, and I can't afford one, so this is a stunt stand-in. This is now Romani Conti. £10,000 for a bottle. Can that be to do with status? Number 1 tier Burgundy, number 1 tier Bordeaux. Surely there can't be that much of a differential. So now we've got to think about what else is going on here. And what's going to come to mind? Scarcity. All of these wines are made in preciously little quantities, but our Burgundy friend is made in such minuscule amounts that it immediately commands a price premium. And then we've got to start thinking further again. So all of these wines are rare, and they're going to get drunk. So they're going to get rarer and rarer and rarer over time as people pull the corks. Is that going to have an impact on our pricing? Is diminishing supply to market important? And now when we're starting to think about complicated things like that, we have to start thinking about liquidity, for example. How are we going to measure liquidity? What we do at Amphora is we take an assessment between published bid-offer spreads. That's quite complicated to do. In fact, as an aside, one of the great pitfalls that wine investors make is buying wines that don't have a ready secondary market. They get stuck with it and are surprised when they get 30p in the pound. And that's why having an understanding of liquidity is so important. So you need to understand all of these things, and you need to be able to weight them according to their importance. I can tell you the status of the wine is the most important, and then perhaps the scarcity, even though that figure was astronomical. So we're getting to quite a complex process now, and that is what our algorithm does. So it takes all of the 9 factors that I've mentioned to you so far, and it works out how important they are. And it's populated with these logarithmic and algorithmic calculations and scores. And when the magic happens in the computer brain, we get an output. The output is just a figure. It's as meaningless as the price in terms of helping us make a decision. But when we divide that figure by the price, that's when the magic happens, because we get a points per pound score. And we can assess any wine you like in the marketplace. Once you've got that points per pound, you can assess the latest vintage Cru Bourgeois, 20 quid from an Iffy vintage, with a £10,000 bottle of Petrus from the greatest vintage ever made. It evens out the playing field and enables us to model that marketplace. It can't make the decisions, because no algorithm can understand the touchy-feely nature of this beautiful product that we deal with. It could never understand that the dragon boat symbol on a bottle of Becherel was going to make it popular in China. It could never understand that one producer in a great vintage had his crop ruined by a hailstorm. Those things need human beings. So all of these results require a qualitative overview. But for us, it helps reduce our universe. Now, we're getting into quite complex territory here, but if this is of interest to you, we'd be glad to tell you more about it. If you're looking to build a portfolio, we can help you by using this quantitative process to help you get the best out of it. If you've got a portfolio, send it to us. We'll put it through the algorithm and show you what it looks like from a quantitative perspective. We'd be very, very happy to do that. So if you want to find more, there's lots on our website. You can go to amphora.london. If you'd like to speak to me about it, you can email me, david@amphora.london. Thank you so much for listening.